So, what happens when a company's star asset, the one everyone loves, turns out to be a complete and utter fraud? Well, today we're going to break down a corporate crisis that led to one huge question. Is this stock a fallen angel just waiting for a comeback, or is it a falling knife that you really shouldn't try to catch?
$5.73. Just take that in for a second. That was the closing stock price for Compass Diversified, or COD for short, on a truly disastrous day, December 5th, 2023. Now, this isn't just a bad day on the market. This is what Wall Street calls a capitulation event. That's the moment investors just give up, throw their hands in the air, and sell at literally any price just to get out.
And that really is the million-dollar question, isn't it? A drop this fast, this steep? It doesn't just happen. To really get what's going on here, we've got to look under the hood and see what went so catastrophically wrong inside one of their most important businesses.
All right, let's set the scene. You've got this company, historically pretty stable, pretty reliable, and then, bam! Seemingly overnight, it's in this financial twilight zone, and its credibility is just shattered.
The whole thing, the entire crisis, it all boils down to one name, Lugano. The market just reacted with absolute violence to the news that this high-end jewelry business, which everyone thought was a crown jewel for CODI, was actually hiding a massive, pretty sophisticated fraud.
So, let's really dissect this thing. How exactly did this happen? What were the financial games they were playing? And just how big was the damage when it all came to light?
You know, the scale of the deception here was not small. It was staggering. An internal investigation found that Lugano's inventory was overstated by more than $375 million. That's almost 40% of its supposed value. I mean, just imagine finding out that a huge chunk of the growth you thought you were investing in was nothing more than an accounting mirage. It wasn't real.
And then, on this make-or-break conference call, management themselves came out and said it. They admitted this was the single biggest loss the company had ever seen. For the market, hearing that from them, that was the final nail in the coffin. It confirmed everyone's worst fears and just poured gasoline on the fire sale. So, you've got this fire raging in one of your businesses. What do? Well, in this case, CODI did something really bold, something you might not expect. They made a big strategic move to protect all the other healthy businesses in their portfolio.
They used a Chapter 11 bankruptcy filing for Lugano, but, and this is the key part, it wasn't a sign of total company failure. Nope, they used it like a surgical tool. The plan was basically a three-step process. First, build a firewall around all of Lugano's illegal and financial problems. Second, get its toxic numbers completely off CODI's main books. And third, take control of selling off whatever legitimate assets were left.
Okay, so with that fire contained, the really crucial thing to understand now is the value of what's left. See, CODI isn't just one business. It's a whole collection of them. And besides the disaster at Lugano, there are 8 other, totally healthy companies still standing.
And first up is a great example, 511 Tactical. This isn't just some vague asset on a balance sheet. It's a huge global brand. They make mission-critical gear and clothing. And their customers? They're the pros who depend on this stuff every single day. We're talking local police, first responders, even federal agencies like the FBI. It's a solid cash-generating business that has nothing to do with the mess at Lugano.
Then you've got BOA Technology. If you've ever put on a pair of snowboard boots or high-end cycling shoes, you've probably seen the little dial system for tightening them. That's them. And it's not just one product. It's a whole patented system, protected by a fortress of intellectual property. That makes it a fantastic, high-margin business that doesn't need a lot of heavy assets.
And if you want to see the real quality in this portfolio, look no further than Arnold Magnetic Technologies. These guys make high-performance magnets that are essential for things like aerospace and the U.S. military. These are not trendy consumer goods. They are critical industrial parts for customers who are deeply locked in. It's the polar opposite of the Lugano disaster.
All right, let's switch gears and get into the math. How does this all add up? How do analysts take these healthy, solid companies and figure out what COD, without the fraud, is actually worth?
So the key to figuring out CODI's real value is a method called sum of the parts, or SOTP for short. It's actually perfect for a company like this. It's simple, really. You just figure out what each individual business, like 511 and BOA, is worth on its own, and then you just add them all up.
Okay, so here's what that calculation looks like in practice. Analysts figure the total value of those 8 healthy businesses is somewhere around $2.8 billion. Then, from that number, you have to subtract all the company's debt and the value of its preferred stock. And what you're left with, at the very end, is the implied value for the common shareholders, $840 million.
And here's the kicker.
When you take that $840 million and you divide it by the number of shares out there, you land at an implied share price of over $11. Now, compare that to the crisis price of $5.73. That's a staggering potential upside of 93%.
But, and you knew there had to be a but, right? This is a huge one. That potential reward, it doesn't come for free. It comes with some very, very serious risks. This is absolutely not a sure thing, and there's a good reason the market is so terrified.
So what this sets up is a classic high-stakes gamble. You've got two very different futures here. The bull case, investors could see a multi-bagger return. That means their money could double or even triple if management pulls this off. But the bear case is just as real. If they can't get their financial reporting fixed in time, they could violate their loan agreements and default, or even get kicked off the New York Stock Exchange entirely, which could wipe out shareholders completely.
So, at the end of the day, it all boils down to this one single question. Is CODI a fallen angel? A collection of perfectly good companies that got unfairly punished for one subsidiary's crimes? Or is it a falling knife, an investment that just looks cheap but is only going to cause more pain for anyone who tries to grab it? The answer is going to decide the fate of billions of dollars, and that makes this one of the most compelling financial dramas playing out in the market today.